Well, I hate to bring this up, but it's the time of year when thoughts begin shifting from summer fun to back-to-school sales. It's a perfect time for us to take a look at perhaps the most important driver of the U.S. economy, you and me, the U.S. consumer. Job growth has been better, interest rates remain low, and housing trends appear solid. So does that mean back-to-school sales, the second largest shopping season behind the holiday season, will be encouraging? For perspective, we turn to our very own Jim Russell, U.S. Bank Wealth Management Senior Equity Strategist. He joins Business Courier editor Rob Dahlmeyer in the studio for this morning's U.S. Bank Economic 360. Gentlemen.
Peg, thanks. Jim, thanks for being here. I think we're deciding whether or not this should be our show's uniform, so we'll have to see if...
It is summertime.
It is summertime. Yeah. There are consumers facing some cross currents right now. What is your assessment right now of the current state of the consumer confidence?
Yeah, I think you've stated it well, Rob. I think there's some pluses and minuses with the consumer. We would give the consumer maybe a grade of B-. Certainly elevated from and better than a year ago, 2 years ago, but maybe not where we want them to be just yet. The positives include some of the things that Peg mentioned: positive housing trends, job growth, low inflation, low gasoline prices. But, you know, maybe the negatives would be very slow wage growth. And so some of the job growth has really not resulted in much wage growth. And in fact, if you do the math, wages are growing at about 2.3%, inflation's 2.1%, so that's approximately 0.2% real wage growth. Again, pretty small and far below what we've seen in the past.
It's kind of a basic question, but something I think it's really important to keep in mind is, why is consumer confidence good?
Yeah, consumer confidence is good really due to job growth, and there is some forward-looking element to the consumer's mindset. Job growth appears to be on the mend. Unemployment's at 6.1%. We're going to get an update on August 1st on where that really stands right this minute. We do continue to see job growth probably continuing to accelerate, and importantly, as we drift into the latter half of 2014 and into 2015, we do see wage growth also accelerating. The retail sales also track GDP, and we continue to see that maybe moving ahead in the 3 to 3.5% range over the balance of this year and into 2015. Therefore, we think retail sales will probably track with that.
We talked a little bit about last week about the federal stimulus and all the things that the government tries to do to make sure that you and I feel good and go out and buy cars and TVs. How big of a chunk of the economy is, you know, consumer confidence and consumer spending?
It's enormous. The consumer matters very much, Rob, and that is 70% of the U.S. economy is the consumer. In many countries, for instance in China, it's only 30%.
Wow.
So it matters very much about where your head is, where your wallet is, where Peg's head is, where her purse is, etc. And that is, the consumer needs to feel good to go out and buy the bass boat, go ahead and do the back-to-school shopping season as well. As you can see in the graph here, the job market really drives a lot of the retail sales and a lot of the consumer confidence. If you're secure in your job or you feel good about job prospects, you're more likely to move forward in terms of retail sales. Unemployment down in the blue line, retail sales up in the red line. So it's really that simple. So the sentiment around the consumer really drives a lot of the behavior.
Well, that's great. Thanks for the information. Peg, I think it's safe for you to buy that bass boat, and back to you.
Thanks for the permission. Thank you. And for the record, I do know where my purse is.